there's going to be a delayed response. At some point, they'll wake up and say, we don't have a choice. But that delay, and because they don't want to repeat the mistakes of the last cycle, is going to cause things to really get out of hand on the downside. So I think it all plays out over, the next year. And it's some of it's going to come fast and furious, and other pieces of it are we're kind of moving towards it slowly.
Just on that point, isn't it what happened in 1929 when the Fed didn't want to cut rates, they didn't want to support the market, and they actually elongated the depression, or they caused whichever
Yep.
we look at it, caused the depression. So they're actually, ironically, repeating the mistake of 100 years prior by trying to not repeat a more recent mistake. Amazing how that would how
Yeah,
that
it's funny how they say history rhymes, it doesn't repeat exactly, but there's a lot of things that you can learn from history because it does seem to come back around each time.
sorry, Tim.
I was just going to say that we've seen a blizzard of executive orders, and I think most people are sort of like pausing for breath to try and get a sense of what's to catch up with reality. Do you think, given the scale and the scope of what the new administration is doing, there is any possibility that Trump is also willing to take on moneyed interests by way potentially of resetting a system without central banks involved?
Yeah, I don't think so. Or if he wants to, there's no way it's going to happen. I,
Because
as I said,
crypto itself is not consistent with central banking because it's a sort of non-government money.
exactly. Yeah, and even trying to do something. Yeah, I mean, he has obviously sworn off of central bank digital currency, so we aren't going to see that. But which is more opposite what you're asking. But yeah, I think you see the Austrian camp out there pushing the idea that we got central banks are bad and we'd be better off without them, and or at the very least, this whole idea of going back on a gold standard. And I have said consistently for a number of years, given where we're at in the super cycle, given the scenario I just laid out, it would be
It's Armageddon. It's like Armageddon.
yeah, it would be suicide if we went on the gold standard, because the only thing that's going to pull us out of that trough, out of that nosediving trough, is going to be money. It's not. It's. I'm not endorsing it. I'm not saying it doesn't lead to something far
Mm.
worse. But reality is, if your hands were tied and you said we just gotta let this thing play its course, and we got discipline now in the central banks because of gold, etc., we'd all be living in caves. I mean, it's not the time. If this were done 30 years ago, I'd be all for it.
But
But
it sounds like you'd be basically sympathetic to the argument that there's maybe a reset involving gold being repriced then.
yeah, for sure, I think gold's going through the roof. I mean, I've raised my 3,000 target to 3,400 for the pre-bust period, between now and the bust. I've got a $20,000 number for early next decade. I've got silver going to 75 now, be pre-bust this year,
Oh wow.
and silver going to 500 by the early 30s. So yeah, I think the precious metals are. It's been a long time coming for silver, but I think they're just waking up.
Because silver's the thing I was keen to ask about because although there seems to be a run on physical gold at the moment that impacts in London and Canada and possibly other jurisdictions, there seems to be an even more powerful run on physical silver. And there does seem to be a lot of evidence now the bullion banks are basically short this stuff, and there's going to be the mother of all squeezes in the not too distant future as people race to try and cover their liabilities.
Yeah, I know that story's out there, and I know there's been a lot of talk for at least a couple of years, and maybe longer, about the big banks manipulating silver and keeping it under wraps, etc. They're not going to be able to do that for much longer if they have been doing that. It. And the thing is, it's in the supply demand situation for silver is very strong, very
Mm.
bullish. So I'm not sure why anybody would think they could hold it down for that long. And particularly if gold gets going, silver becomes poor man's gold. So,
Mm.
you'll have that plus the industrial demand that comes from EV, et cetera.
Can hear the world's smallest violin playing just for the bullion banks as we speak.
Absolutely.
So in terms of sentiment and looking at gold and silver, could obviously I don't subscribe to this argument, but could one say that maybe the fundamental views that are now coming out and in the paper, could they create a short-term top, a pause in this view? Because it seems like the market is getting going, and usually the news flow doesn't actually match what the market's doing. In other words, it's a contrary call to say perhaps we should be bearish here. Technically, it doesn't look like that. I don't think so. But I'm just wondering, is this a bit of a warning sign that we could be near a perhaps a short-term top?
If it is, I'll be wrong because I am bullish, as bullish as I can be. I think gold is breaking out. I think silver is about to get going.
Hmm.
It's really people don't understand. People are very disappointed with the miners because they haven't tracked the metals, but silver itself gets beat up, and people think it's done nothing. But silver was, back at 22 less than a year ago,
Hmm.
and was in the teens not long before that, and we're 32, and I think very quickly going to be up in the mid 40s. So I just don't think people realize because they're so used to silver not doing what they wanted. I just don't think they realize that. I think the picture is very pretty in terms of a bullish chart, and gold obviously has been ahead of that, but I don't see anything there that causes me pause. Like I said, I could be wrong, but I'm thinking this thing's just getting ready.
Yeah, the fact that people, I mean, there's no talk about it on the street, really. I mean, there's no major sentiment indicators. The only thing that I looked out for in the 2011 top was that there was a lot of adverts for buying gold and sell your gold here and all that sort of stuff. You had it in lots of different places, and I was traveling in Poland by a company that had actually they made their money. They bought this airline, and this airline was effectively funded by gold sales, and it was very rare to have this particular airline in doing internal flights in Poland, which then went bust because the price went down. So the big signals aren't there for sure. And it's certainly technically, as Tim and I have been discussing as well in between our pod with you, that things have been looking really bullish. Obviously, it's been Tim's kind of core strategy for a very long time, but now it really feels like things are getting going. Now, I know in previous interviews that you've done, you've said that it's gold and silver that you're interested in, and platinum and palladium you're not so interested in. But I just wonder what you think now, because I'm looking at a chart of platinum and palladium, mainly more palladium actually, and that looks like it's basing out. And I think this we could get a sympathy rally with both
Yeah,
of those as well.
yeah, I wouldn't disagree. I just don't follow them closely, so I don't have real opinions on them. Yeah, I would think they probably do have sympathy rallies, and even copper. I am probably the bull on copper out there. I'm calling for $6 copper. Currently, 430 or whatever it is.
430, yeah.
Um, and I think it really looks good, and has not really moved. So, it had run up to five, and then has been consolidating for several months, and I think it's ready to go again, or pretty close to ready. So I think the next 3 to 6 months in copper looks awfully good.
I mean, that's good for the global economy in the short term, isn't it? Because it shows that there's a lot of demand. And we're also seeing the Hong Kong stock market is starting to round out and turn higher. The Chinese stock market has confounded a lot of bears from 2 years ago, saying that we're in deflation, and that's gone against their views there. But so there is demand coming, and there are and these to me just put the picture together of more of what you're talking about here, that there will be this feeling that the market is invincible because you've got all the major powers stock market's doing really well, and trade is doing really well, and the dollar's weak, inflation seems to be under control. What could possibly go wrong would be the question.
Yep, and I do think it's a time to really realize that linear thinking will get you in trouble.
Ah, yeah.
If you think everything is a straight line, think again because it's exactly that. Just at the time when everything looks like it's in great shape. Things are becoming the other way.
Aluminium, have you looked at a chart of that? Because that is looking more bullish than
Yeah,
copper.
I think aluminum looks good too. It looks to me when I look at XLB, which is the basic materials ETF, it looks to me that like that has less downside risk than the rest of the market here. Short term, I'm looking for, as I said, 3 to 6% correction. So it looks like that has maybe 3, but less than that maybe, and a lot of upside. I mean, I'm looking for COPX, which is the copper producer, to go to 75. XLB, I'm trying to think what my XLB target was. Hold on a second. XLB, I have a 150 target on it. So, I think that one can give you a pretty good move here. Where is it now? I think it can correct 89? Back. Yeah, correct back to 84, say, and from 84 go to 150. That's a big move.
So, in terms of the elements that are maybe showing some signs of cracking, looking at the house builders in the US, they have come off, haven't they? They've come off pretty hard, and either this is another buy point where we'll get another leg up. Well, I guess obviously either they're going to go down or go up. So I'm not saying anything radical there, but I don't like the pace at which they've fallen. What would you say to that?
Yeah, I think you're right on. I looked at them this morning. I kind of go through my different sectors to kind of see what they look like. I'm not sure it's going to do this, but there's a possibility of a double-digit decline in XHB, which is the home builder ETF, here short term. So if the market pulls back 5%, and that does double or even maybe more than double that, that will be a surprise to people. But I think it is the case. You've got a 7% 30-year fixed rate mortgage in this country. The rates have been holding housing back. There, you saw some activity late last year and into January of people who I think decided, hey, rates are heading higher, not lower. I better buy now because it's only going to get worse. So some of that pent up demand of people who held back because rates moved up, kind of when rates came in a little bit from that, the 10-year went up to 480 and came back down to 450 or a little below. I think that caused the realtors probably called all their people sitting on the fence and say, oh, you better buy now, So you got a little activity there. But frankly, housing peaked, I think, a year or two ago. And, it's going to roll over hard in the bust. I've been saying that if you get a rally in bonds, drop in rates here, that you could get a spring bounce in housing. And I think that's still possible. But I think in the very near term, the next couple of weeks, the home builders look like they could be vulnerable here, and come down 10% or more.
I think it was 2005 that the home builders had topped out ahead of the crisis. So this is what I'm saying about there's this.
Yep, it's an early cycle thing because it's so interest rate driven. But interestingly, because I think we are moving, I'm bullish at bonds, although I think they may correct here for a little bit with stock market. But ultimately, in the next 6 months, I think you could see the 10-year down below 3%. And if you get that, you'll get the mortgage rate down under 6 or maybe 5.5. So you could get one last kind of splurge of people who think they missed it and they're glad rates are down again and jumping in. But you're not going to get the volume of activity you had at the top, a year or two ago. And then, when the bust hits, I think, at least in the States, you could see 30-35% hit to the prices. And, I know UK's got its issues, so, you guys will get hit too.